Hey guys, so good morning. It's the day after. It's the day after one of the largest drops that we've seen in the Philippine Stock Exchange index and in our market in general. Please remember, I've been investing more than a decade, and I've seen this happen. I've seen the 2008 crash happen, but this one is faster. This one is uh, something that's accelerated, no, especially let me show you the difference between 2008 crash to where we are today. The 2008 crash was just a financial crash, meaning, of course, it's not good when you see people lose jobs. However, uh, people were still going out. People were still living their lives normally. People, especially in the Philippines, we have to remember the context. The recession in 2008 was in the US and spilled over to Europe. The Philippines was virtually unaffected because remittances were still very, very high. The BPO industry was very robust, very strong, and spending was pretty much there, meaning people still went out to Pure Gold, people went to Jollibee, people went to malls, people lived their normal lives as well. The crash that we're seeing today is basically triggered by a lot of panic, fear. You see a lot of people skipping on their normal routine, their normal day of life or way of life. You will see people not going on vacations. You will see people um, you see people not going out to restaurants, no gatherings, and not doing their normal things. With that being said, that will hit consumption massively. That will hit the economy in such a way that's different from where we are today as well. So that's one thing that I'd like to tell you, that this is heightened. This is something that's bigger. This is something that's different as well. So that's why I'll say this over and over. It's so important that you know how to keep your cash, you know how to preserve your cash, you know how to uh, you 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 exercise caution also, as the market is still bearish, as it's still low. Albeit it's true that from hindsight, a couple of years from now, this will be a very very low point. However, you always exercise investing based on what you can tolerate, based on the risks that you can tolerate as well. If your goal is cutting losses, cut losses early as you can. And I hope that you're already in cash right now. If you're an investor, I hope that you're holding issues that you really, really believe in, that you really hold on, like, and they have dividends as well. And as it hits lows, also, you're also double downing on things that you believe will perform well later on as the economy starts to rebound as well. But uh, it's different. This is primarily motivated by fear. And one of the biggest triggers also that we could see is that yesterday, as you all know, Duterte made an announcement to somehow place the entire Metro Manila in lockdown. No movement in and out from cars, seaports, airports. No movement for until a month, and that the impact of that economy-wise, you will see uh, a lot of people can transact business. A lot of people can go on their day-to-day living. Of course, that the impact of that alone will be huge already. You can expect malls. SM was supposed to have a 3 day sale today, starting day up until Sunday, but because of what's happening, people are not supposed to go and congregate in mass meetings, or at least go in crowded areas as well. The expectation is there will be an impact not just to the mall but the small businesses that are there as well. I've been going to SM over the past few days to buy stuff because we relatively live there, close to SM Aura, and I've already seen it how restaurants, establishments, food places, uh, retail shops have very very low traffic already. How much more now when all of this is heightened? Please remember, one of the reasons why a lot of people, this is now placed in the global forefront because the NBA, a league that's very very popular in the Philippines, has suspended all of its games. Popular NBA players have been hit with the coronavirus. Then you have popular celebrities getting hit. Now it's getting a national spotlight, that it's more serious than what a lot of people think it is as well. That it's more serious than how we see things being. So uh, this lockdown has more for, from a health standpoint. This lockdown is somehow good because it prevents the spread of the virus. Uh, it prevents it from being spread. However, from economic standpoint, uh, this is not as good as what we want it to be. Now, markets are about to open. It's 9 a.m. here. Market will open in 30 minutes, but here's something that I want you to expect for today, based on what happened from yesterday. Number one is the Dow Jones slipped 2,000 points as Trump coronavirus response disappoints. Fed funding boost fade. So the Fed tried to inject money, but above and beyond them trying to inject money, it still didn't work. U.S. stocks massively plunged, and here's what's so interesting about that. This is one of the worst trading days since 1987. Both Nasdaq and S&P 500 enter a bear market already. So. Yeah, that's true. Also, I've got a lot of questions. What could possibly make this turn around? I believe that even if there's good earnings, there's good release of dividends, or good earnings or disclosures from companies, it still wouldn't taper the fact, still wouldn't protect the fact that everyone's not selling based on earnings. People are selling based on fear. People are selling because they want to be liquid. People are selling because they don't know what will happen, or they may need money because they want to hedge and protect themselves from their jobs as well. So those are things that need to be considered while all of this is going on right now. Another thing for tonight is that the Dow futures are down 0.73, Nasdaq futures are down 1%, S&P futures are down 0.66. So uh, it's not as bad as what it was today, but it's also not as robust as what people are expecting, that there would be a rebound. So that it's so true that as long as the trend is still bearish, you can't really expect it to reverse and go up again. Now that's the that's what happened in the Dow. Let me show you the charts before I go into Asia. If you look at S&P 500, pretty much massive movement. It's down 23.22%. The Dow Jones, similar thing. Large sell down, plus it broke down from a very large and specific 50-day moving average as well. So when you see movements like that, you see trend reversals already. So the difference between the US markets and the Philippine market, the US markets were hitting all-time highs, and it's just now starting to just reverse from it. The Philippines, though, has been already in a downtrend. The Philippines has already been bearish way before the Dow Jones or S&P 500 or Nasdaq started to reverse. So I don't know how extended our losses may be. I don't know how low it will go, but what I do know is this: way before the drop in US markets, we've already been dropping. So more drops in the US markets may translate into more drops for the Philippine market as well. So this is the Nasdaq composite also massively down. And just so you know also, as you all know, Japan, South Korea, they're ahead of us in terms of time zone. They're down 6% already. So the Philippines yesterday was around 10%. Dow Jones was down 10% also. So 6%. I don't know. I saw a post also that saw that MSCI futures for our region was down 17%. I don't know how how large will we be affected by that, because we're just a very small part also of the MSCI index. But that being said, uh, even if you look at indices around the world, you'll massively see this. Uh, Markets around the world, everything is pretty much down. Also, from technology stocks uh, to all of the big brands that are trading in different countries around the world. Disney's down 12%. Um, Gold, though, is is still at the 1577 level, which everyone was hoping that it would be like the push upward. Here are some global indices. All of them are also down as well. Uh, if there's one thing that I could leave with you is, uh, if we're looking for a glimmer of hope at the start of a trading day, we're looking for that. Hey, it's already cheap already. There are bargains already. I think we're not yet there. There will be bargains, but even though if there's bargains, it's not something that you would want to catch while everything is falling. If you are a long-term investor, of course it's nice to buy when there's a lot of fear, but it's nice if you can temper it with waiting, the discipline, and the patience that as it starts to go down, you're not catching it while it's going down, but you wait a bit until it starts to consolidate. So the charts will show us everything naman when we see a consolidation happen. It's very, very important that you wait for a consolidation if you're an investor. If you are a position trader, it's very, very important that you need to wait for the trend to actually reverse as it starts to reverse, and that's when you start to come in. So as of this point in time, it's not yet there. What's pretty evident is we could expect the economy not to perform as well while all of this is happening, not just in the Philippines, but from a global standpoint. And I keep saying this, it's not just transportation, it's not just tourism, it's global trade, and now it's going to hit consumption as well. So I think one of the things that have a bright spot, and that's why I posted a video about this, is that people who are earning off the internet, people uh, who are doing accounting outsourcing, who are doing other things that they don't leave the house, they'll pretty much be unaffected by all of this. But there, I hope you stay safe, guys. Rest assured, I'll keep updating you. I have I have more free time now because I'm just gonna be at home also. I have more free time because there's really not much to do also as well. So just comment below if you guys have questions, and I'll try to make more videos off of that. Comment below if you guys want to know more about all of the things that's happening right now. But this is just to end this. This is something that I believe is different from what we've seen in different from what we've seen in different types of crashes. Now, this is not the 2008 crash. This is not also the 2001 crash. This is also not the 1997 Asian financial crisis. So it's a different crash for this generation. It's a different crash for this era. And guys, if you have money, cash is king. If you have money, stay in savings. If you have so much surplus, then live your normal life. But for those who don't have emergency funds, highly suggest that uh, you protect yourself first. You protect yourself for the foreseeable future, and then as money starts coming in again, that's when you start to reinvest. So I guess that's it for now. Send me your questions. I hope that this added value to all of you as well. I hope this is something that gave you insight. But I hope that whatever is happening, whatever you see here, it doesn't cause you to fear, but it causes you to move logically still. Because when you panic, that's when you lose as well. So that's it for now. This is Marvin Gurma. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.